I feel like that's always such a fun question I ask my boyfriend. I'm like, what are we gonna eat for lunch? What are we gonna eat for
Yeah,
dinner? Like that's like the high point of our
I
day
know.
now.
I'm totally planning my day around meals completely. Like, when's the next one? When's the snack? When's the afternoon iced coffee? When's dinner? You got to do it.
Let's see. I'm like looking at the attendee list. So, hi Carly, Christine, Dan, Erkin, Manny, Rohini, uh, Sylvia, Sydney, Warrior, Alex. Thank you so much for joining. And before I introduce Katie for today, I also want to give folks the opportunity of just putting in the chat why they decided to join today's session. We had the pleasure of working with public.com earlier in the year, and we learned a little bit about our audience of folks that are new to investing and are interested in the topic, or they find themselves as an expert, but also want to learn additional information. So if you can in the chat, and you can do it to all panelists and attendees of just why you decided to join today's session. Awesome. So Warrior said, I'm curious how millennial investing affects the markets. Alex is new to investing, but excited to learn more. Thank you, Warrior and Alex, for sharing. Anyone else want to chime into the chat? Make sure to do it to all panelists and attendees so everyone on the line can see it. And then I'll pass it along to Katie to kick us off. Oops. Sylvia said she's always looking to keep learning. Of course, at a time like this, it's always important to learn as much as possible. Carly says, similarly new to investing and thought this would be a good introduction. Thank you for hosting. Well, thank you for joining, Carly. We appreciate you. Awesome. Okay, so it's about 12:03. We'll let some other folks hop in as we continue. I'm sure a lot of folks are gathering their lunch at this time. So my name is Lauren Rogers. I'm an events producer at General Assembly based in New York. And if this is your first GA event, a little bit about us. We started off as a co-working space back in 2011. And one of the requirements for our members was that they had to teach other members something. So whether it's software engineering, UX design, personal branding, about myth busting the markets. And as we continue to grow as a company, we found out that that's something we solely want to do. So now we only teach courses and workshops on a full-time or part-time basis. We have about 10,000 people learning with us remotely. And then also, if you're just interested in upskilling, we offer short form courses and workshops. And lastly, I would also encourage you all to take advantage of all the free events that we have going on right now. I can link that after our talk, but really encourage you to dive deep on the website and find something so you have the opportunity to learn during this time. Just a few meeting norms. Feel free to utilize the Q&A function at the bottom of your screen if you have any questions for Katie in real time. Also, I'll be on the chat as well, dropping in some resources. Sorry for the sirens. And yeah, without further ado, I'll pass it along to Katie of public.com. She has been a partner with us for this whole year, and it's been such a pleasure working with her. And so I'm actually really excited to learn about myth busting the market. So I'll let her take it away.
Thanks, Lauren. +1 on checking out all of General Assembly's amazing content and events. I've just been blown away in the past few months of how much there's there and how broad the content is. So definitely check that out. So thanks, Lauren. As Lauren said, my name is Katie. I'm the VP of Marketing for public.com. We're a new kind of investing app. If you're new to the investing game, I think you'll be surprised at kind of how things have changed and what's different. Specifically for this crowd, you guys are all pretty tech savvy, used to working with like modern platforms. What we're really building at Public and what we're really trying to do is change the culture of investing, making it more accessible, more intuitive, more ways to learn, and also create an experience that feels familiar. Like an experience you'd have on another app or platform. And so really eager to talk to you guys today. So real quick, my background's kind of mixed. I've worked at startups, I've worked at advertising agencies, I've worked at public companies, worked for myself. I really just joined Public about 9 months ago because I really believed in the mission, and I love startup culture. That's why I love GA. I think there's something really amazing about building. And thought it would be a good kind of introduction to show you guys my frequently used emojis these days. Lauren and I were joking earlier that it's funny that I have the Canadian flag there, a couple people crying, but it's not all bad. I hope everyone's staying safe and healthy, and we're gonna trudge on. So real quickly, I sort of briefly introduced public.com, and I'll get more into kind of what we do later within the other content. But essentially, we're a social investing app. So you could almost imagine it like a traditional investing platform where you'd buy and sell stocks mixed with almost like a Twitter or a Venmo. So what we do is you make it possible to connect with your friends and other people in our community to talk about the investments you're making and learn from each other. And you can do this all in the very same place where you manage your portfolio. And I think it's good just before we start to kind of just talk about where Public and our product fits into this bigger kind of landscape of personal finance and investing. So a lot of times when you hear the word investing, it can mean a lot of different things. And over the course of your financial journey, this is a kind of a sample journey that someone might have. So they might be focused on paying off their debt, and from there they might build a little bit of a savings. Maybe after that they're investing in a 401k or Roth, so that's a retirement account that is tax advantaged. And then kind of the next step there would be a brokerage account, which is buying or selling stocks or mutual funds. And there's a couple kinds of brokerage accounts. There's something called like a passive account, which is you would set your general kind of risk profile or goals, and someone would help you, or a robo-advisor would kind of create a bundle of investments you could make. Public, this blue box, is on the end of active, which means you're actually picking and choosing specific companies or exchange traded funds, which is just like a basket of companies in a self-directed way. And then, you know, on top of that, you could have what's called alternative assets. So maybe there's a real estate investment or art or crypto, all ways to kind of build your financial package for yourself, but wanted to kind of just show you guys where Public specifically fits and what this conversation is really going to be focused on when we talk about investing. And real quick, if you guys haven't tried the app yet, this URL has a sign up link. You would enter your number and you can get started with $10 worth of free stock on us. So you can kind of give it a try using a little coupon from us. I'll show this again at the end. I just like to show it at the beginning because sometimes people go download the app before the end and then they miss out on the perk. So next 30, 45 minutes, depending on how fast I talk today. Not really going to give you direct investing advice, not going to say, you know, this is a good stock, this is a bad stock, but mostly just want to share basic concepts and news you can use about investing and kind of how the investing game has really changed. And then at the end, we'll leave some time for your questions, so feel free to drop those in, and Lauren and I will go through those at the end. This slide I have to show, it just says that, you know, I'm not a financial advisor. I'm in marketing for a tech company that allows you to invest. And so, you know, when it comes to the stock market, past performance does not guarantee things will happen that way in the future. And this content is really just for educational purposes. And so with that, let's go. So the format for this session today is unpacking myths. I think the biggest myth I always hear from my peer group is that, you know, I haven't started investing early enough, or I don't know enough now, and it's going to be impossible for me to learn, and it's just too late for me. This is a huge myth. We actually just fielded a survey of about 3,000 people with our friends at Finimize, which is a great financial newsletter if you're looking for some daily insights there. But we asked them, when did you first learn about investing at a very basic level? And 30% of them said, or no, sorry, a quarter of them said after they were 30 years old or older. And so that is a significant portion of people who are starting relatively late in the game. So if you're in that group, you are not alone. The second biggest chunk is the 21 to 30. So that would be like after college learning. And then, you know, very few, a third, very few learned before college. And so if you feel like you're behind, it's not a you thing, it's an us kind of cultural thing. We don't teach financial literacy in schools. I always think it's hilarious that in 7th grade, I was taught how to use a saw in shop class, something I will never do again. And yet nobody ever talked to me about credit or budgeting or how the stock market works. And unless you're a business student taking some of these financial classes, it's just never taught. And so very relevant to you guys, you know, 55% of people said that when it comes to investing, they taught themselves. And so that's how most people are learning. They're taking, you know, General Assembly sessions or reading blogs or books, teaching themselves. And that's great because there's a wealth of knowledge out there. But definitely don't feel bad if, you know, you're in your 20s or 30s and you're like, I don't know the fundamentals of this, because it's just something that isn't really ingrained in our educational system. When we talk about like investing culturally and people starting late and people not investing at all, I always like to show these new stats from Pew Research. I think you hear a lot of conversations about the stock market's booming, that's great, or, you know, the market's on fire. Politicians will use this sometimes to share wins. It's actually interesting because half of the country has no positions in the stock market. So only 52% of US families have any positions in the stock market. And that includes, you know, through a 401k account or a pension or through like a brokerage account, like a public.com. So most people aren't really in this game, and we'll get to those reasons why. There's obviously huge discrepancies by income, which, you know, makes sense. Wealthier people have the means to invest or have historically had the means to invest. There's definitely big racial gaps. There's definitely big gender gaps. And so just really important to contextualize when we talk about the stock market, and the stock market being such a creator of wealth over time. It's really important to understand who that applies to right now. And so this is the S&P 500 index over the past decade. It's up 191%. The S&P index is just a tracking of the biggest 500 public companies in the US and their share price over time. So that is a huge gain. And if you had stocks that aligned with the S&P 500 10 years ago, you're doing pretty good. But only 50% of Americans are seeing a direct impact from those gains. You could have an economic conversation around, you know, well, do the gains trickle down? There's a debate around that. But like when we talk about direct impact, people who have investments, only 50% of Americans saw that direct impact. Only 31% of Black Americans and 28% of Hispanics have any positions in the stock market. And women invest 40% less than men on average. And none of those things are really surprising when you think of over time kind of how this world has taken shape. From the beginning, it has been very tied to notions of exclusivity, keeping people out. There's jargon that's used that's overly complicated. This is just marketing and media messaging kind of reinforces a homogenous view of investing, so that if you don't look like these pictures on the screen, you might not think this is something that's for you or accessible to you. And at Public, that's really what we're trying to change. We're trying to change the culture of investing from the slide you just saw to the realities of how investing can and should be. And so the people who have invested in Public, our company, our startup, and also the people who are in our community, we want to reflect this new culture of business and entrepreneurship and people with amazing ideas, and build a broad, diverse community of investors. The second myth I want to talk about that's a huge hot button issue right now is that investing is sort of like gambling. If you read any business or financial news, you will see these headlines of what are called YOLO trades or day trading, people placing crazy bets on, you know, companies that are in a lot of economic trouble, small companies, niche companies. Hertz is a good example of this. If you guys have been following the news, they recently filed for bankruptcy. And then when they did, they also issued a statement that they were going to offer more stock for sale to the public. This is something that rarely ever happens because usually when a company goes bankrupt, the stock is essentially worthless to the retail investor who is at the end of the chain. After everyone gets paid out in a bankruptcy, that's usually the last group. And so going in at that point, it seems a little nuts. And a lot of experts and analysts said, look, no, we don't know what's going to happen to this company, but it's kind of unprecedented that they're even offering their stock to people. But people were buying it because investing's become easier now, which we think is great. But with that comes a sort of some behaviors that are potentially risky. So at Public, we actually, when this happened, we removed Hertz from our app because we felt that, you know, most of our community are novice investors. We didn't want them seeing a headline or a message board and making a move and having their first experience in the stock market be potentially getting burned because they read something somewhere. So really important if you hear about kind of like the trading culture, retail trading culture. I think a big thing that, you know, it took me a while to even kind of understand the differences of is that day trading is not the same as investing. They are both kind of under the same umbrella, but they're two profiles of investing that are very different. And at Public, we really focus on the longer term investing. Trading is when you're in buying and selling stocks in a short-term capacity intraday to make money quickly. So the level of effort day to day could be pretty high. If you've seen pictures of people with their charts up and multiple monitors, that's because in a day stocks can really be volatile. And a lot of that is trying to time what's going to happen. It's generally riskier. Longer term investing is more about having a point of view on a company you believe in or a trend and building your wealth over time. So with that, the day-to-day level of effort is lower because you're not necessarily concerned with how things are moving in a few hours. You're concerned on the long term, where that company's going long term. And because of this, it's generally a safer investment. Of course, no investment is without risk. But these are two very different things. So on Public, we're more focused on long-term investing. We actually don't allow day trading on our platform. And so what you're seeing there are people who are saying, you know, I believe in this company for the long term, over a year, sometimes several years. And the reason just for that difference in risk profile is that if you look day to day, even week to week, the market can be volatile. So this is the Dow Jones Industrial Average, which is like a good eagle eye view of where the market's going. You can see over time, there have been definitely historical events where there's been drops or spikes. The latest being, you know, in March, there was a big drop when COVID was really starting to become a reality for many people. And since then, it's recovered. So we don't know what's going to happen in the future, but if you zoom way out, the market tends to go up over time. The average return annually is 10% for the full market. Could be different stock to stock, obviously. But if you're zooming out and you're investing in the long term, these little kind of bumps along the way aren't going to hit you as hard because you have a long-term focus. If you're trading and you're short-term, you could really get burned by a bump that happens in a short time period. So because of all of this, at Public, we're actually just building things within the app so that as we make it easier to invest, we're giving you more access, we're making the tools more familiar, we're balancing that with some safety nets for new people so that you don't stumble and potentially have a bad experience investing during your first go at it. So one of the things we do is we add safety labels to companies that the SEC has deemed risky for whatever reason. There's three kind of big broad groups of stocks that the SEC says could be risky. One is companies that have gone bankrupt, like Hertz. Another is companies with really small market caps. So they're just smaller companies. They're more prone to volatility. They might be a riskier bet. And then another one is like a specialized ETF. So again, an ETF is just like a group of stocks you can buy at once. Sometimes there's what's called leveraged or inverse ETFs, and they're a little more sophisticated than your standard ETF and can therefore be a little risky. So in our app, when you encounter a company like this, we'll give you the context. You can always go ahead and invest, but we want to make sure that you understand. Third big myth is that you need a lot of dough to get started. This used to be the case. You used to need to have a fairly large account minimum to open an account, or you needed a financial advisor. A lot of this changed with the home computer in the 90s. So I'm probably dating myself here, but the E-Trade baby commercials from the 90s, essentially the takeaway was, we make investing so easy that a baby could do it. And that was the first kind of home brokerage software where a retail investor could actually buy and sell on their own. And even with them, I think the commission fee started at $20, meaning when you made a trade, you would pay $20 on top of whatever you were investing. As there became more competition in the brokerage space, what is called the brokerage wars kind of took off. And that increased competition played in the favor of consumers, in that the commission rates just kept dropping and dropping and dropping to a point where today the kind of norm is no commission fees. So Public, for example, you can buy and sell and there's no fee you have to pay for that sale. Another big shift that made it more economically accessible to invest outside of, no account minimums, no commission fees, is this notion of a fractional share. Public was one of the first companies to kind of do this. And you can kind of think of it as like an Uber pool for investing. And so in the past model, you had to have the full amount of money to buy one share. It's actually funny, I made this slide a few weeks ago, and Amazon stock now is, I think, around $3,000 a share. So in the past, if you wanted to get in on Amazon, which is obviously a powerful company, a high-flying stock, many people say it's a good investment. I'm not giving investing advice, but a lot of people believe in that stock. In the past, you would have to have, in the past model, you would need $3,000 sitting in your bank account just to get in on that. And that just immediately eliminates so many people from investing and from learning about investing. With fractional, a company like Public will take those shares of Amazon and break them up into small pieces and give you whatever give you the percentage of a share that you can afford. And so if you say, I have $10 this month, I want to invest in a company I believe in, we will give you a fraction of that share for your $10. And so the big kind of game changer here is more people can have an active experience investing and can actually participate without having so much skin in the game, without needing to put their, savings, their rainy day savings fund into one share of Amazon and hope for the best. Now you can kind of start small and build over time, and it's a great way to learn. So in Public, this is sort of how it looks. In the past, you'd say, okay, I want to buy a share of Apple. One share is $280. The brokerage would charge you the $280. Maybe there'd be a fee. With the new model, you can say, okay, I have, 25 extra dollars this month. I really, believe in Apple. I want to start investing. And you could just buy a fraction of Apple stock worth $25. And the step we add at Public is asking you to share why you invested. You don't have to do this, so you could always mark it as private, but this is really it illuminates kind of why people believe in stocks. It helps new people understand how more seasoned investors make decisions. You can learn about, their rationale and comment and have a conversation. And so we think that step unlocks a lot of ground when it comes to financial literacy. Another big myth is that you need to be some sort of financial whiz or expert to get involved. I think a lot of this is, understanding some of the basic terms, understanding what are the signals that would show a business is healthy or growing. But this picture makes me chuckle. I actually blacked out this guy's face because he's a real person. But this is kind of the stereotype, right? Of like, oh, I'm going to get into investing. I need 4 screens up with all these crazy charts, and I'm going to be watching it all day as I'm trying to do my job. Like that's like the day trader profile I shared. For a long-term investor, yes, you're looking at the financial statements and that's important, but that's not the only thing you might look at. And so this is from our survey with Finimize, and it was one of those questions that asked, select all that apply. And we asked, which factors do you consider before investing in a company? Obviously, the financials is the first one. I mean, if a company is, bleeding money or not growing, like those are signals that, okay, maybe you don't want to invest in this company. But look at all the other reasons why people invest, and they're very significant to how people make decisions. The products, is their product innovating? Is it serving a consumer need that's growing? If they're a B2B company, is the potential end customer base growing? So the product is a huge reason why you might, and that's something that, you're not going to see in a financial statement from a company. That's why you see things like Apple doing their showcases for products and things like that. It's to drum up awareness of their product momentum. Another one that's big is industry trends. So, we saw a lot of this at the beginning of kind of the social distancing. Zoom stock was flying off the shelves. Anything related to like remote work, cloud computing, even Lowe's, because people were improving their homes. There were trends happening in culture and society and business that were pushing certain industries, categories, and stocks forward. And so knowing, kind of having a premonition about trends or understanding trends, maybe you have subject matter expertise in data analytics and you understand which companies are the strongest players there. These are all things that can weigh in your decision as well. Another biggie, especially for younger investors, is values. So this could be, I want to support green energy companies. It could also be an eliminating factor for people. I myself, a few weeks ago, did some research around which public companies utilized prison labor because I just personally didn't want to invest in those companies. And so your values do come into play as you're making these decisions, and you see that increasingly among younger investors. And then the last one is leaders. I mean, is the leadership of the company people you believe in? Do you admire them? Do you trust them? Has there been turnover? These are all things, again, that are layers of qualitative information that aren't necessarily captured by just looking at a chart. So an example of just kind of investing in what you know, and that's one of Warren Buffett's big things. I think we all have domain expertise in certain areas, and you can apply that knowledge in a way that you're combining your passion and your knowledge with investing, and it's a lot of fun. So just an example from me, this is a recent investment I made in public. As you can see, the amounts are never shown. It just shows that I invested. But I had made an investment in Elf Beauty maybe like 3 months ago. I think the price was $12 a share. Pretty cheap stock, relatively speaking. But I just was noticing that their marketing was really blowing me away. They have a massive presence on TikTok. They have huge communities on Instagram. They had just launched a loyalty program. And, I was thinking through trends in consumer behavior and thinking, this is a company with great products. I've used them. They have a forward-thinking approach to marketing, and they're offering products at a price point that's much cheaper than some of the leaders in the category. And so my hunch was that, I think this company could grow. And the stock has gone up. So that was like a good call. Sometimes they don't always go up. Sometimes you have an instinct and it doesn't work out. But this was an area where I had some expertise and I was able to apply that to an investment I made. And that's kind of the beauty of why community works so well in public. It's not really about dropping into a community of people who, look like CNBC talking heads and they're going to be talking about financial statements. It's more so a mix of people with different domain expertise that when put together, you can really share a lot of ideas. And so I might have expertise in marketing, and maybe I know a lot about the vegan food industry. But you know, my friend at the bottom here might work in healthcare, and he might really understand the nuances of that space. Or I might know someone else who, you know, builds product for a streaming media company, and so she might understand why, you know, Roku might be an interesting investment. So when you bring all these people together, you can really broaden like your literacy in like a horizontal way. Quick kind of example here that just happened yesterday. I don't know if you guys saw this headline, but Harvard announced they're going to be fully remote, and there was this like brouhaha over it because they're still charging $40K a year, which is crazy. You should just take the General Assembly courses. Not the same thing, but I saw this and I was like, okay, remote learning is definitely a trend that's only going to grow. I did a little research, and I had heard about this company, Chegg. It's a public company. I know they provide tutoring, virtual tutoring software. And I did a little digging, and I decided I was going to make an investment in Chegg. I explained some of my reasoning here. So, you know, they have 3 million subscribers, but there's 15 million college students. They seem to be growing before all of this happened. And I'm like, okay, maybe Chegg's a good investment. So thanks to fractional, you know, I wasn't like super sure, but I wanted to get a position going. So I think I maybe invested like $10 in Chegg. So I shared this with the community, and immediately some of the college students in the community started telling me about kind of how Chegg works from their vantage point, which is they're the consumer. They've used Chegg, they see their friends using Chegg, and I'm hearing, you know, everyone shares their subscription passwords, so that's going to be a challenge. I heard that universities were actually kind of cracking down because Chegg could be used as a vehicle for academic dishonesty. These are all insights that I read multiple articles about this company on Marketplace and other places. You would never get that layer of like direct insight. We even had someone who used to work for Chegg chime in. And so you get this layer with a lot of things. People know a lot about, you know, narrow topics. They can go really deep. And that's kind of a level of insight that's hard to get in a general sense. And so I just love this example. I learned so much from this exchange. It didn't, you know, I didn't regret my investment. It didn't necessarily make me change my mind, but I came out of there being smarter about how Chegg fits in the space. And that's kind of what it's all about. Fifth myth, talking about money is rude. I grew up in a family where this was very much the case. We were always taught to never talk about money. I think in obvious cases, it's true. Talking about money is rude if you're comparing or giving raw numbers. But talking about financial things in a general sense is really important, I think. You know, I think we're seeing a lot more of it now. Even, you know, we have interns at Public, and they tell me how like they talk with their friends about this stuff, and we're seeing a lot of change with that. People are increasingly more transparent because they know that talking and sharing information is empowering. I think a good example of that are trends, you know, with millennial employees and younger sharing salary information, because collectively that knowledge can help them ensure they're getting fair compensation. And so this idea that you should never talk about money or financial things, that's really, I think, changing a lot. In our survey, almost 60% of people said they were already talking to their friends about investing. You know, one of the insights at Public we had was that people who do invest were frequently sharing screenshots on text, email, with their friends to discuss what they were seeing. And so our product team actually built a messaging feature in our app so you could DM your friends and other investors and actually do so in a really productive way. So like just by tagging a stock, you can embed a chart, you could set the time frame. There's even like a Zoom-like link. So on this third panel, you'll see like that link. You can start a chat group and then share it out to Twitter. You could share it on LinkedIn. You could share it to your friend group, and people can join directly from the link. And so what we're trying to do is just, people are already having these conversations. Let's just bring them into the place where you're actually investing. The sixth myth is that financial news is boring. if you turn on Fox Business or CNBC, there's a lot going on the screen. I'm not personally sure all of it's necessary. I think some of it is designed to create hype. All of these things are, this is relevant data. It's interesting if you're kind of looking into the charts day to day, but like, I don't know about you guys. I don't really want to sit in front of this all day. It's like stressing me out, even as a still on the screen. But what is interesting is that in this kind of era right now that we're in, finance and business news is actually the fastest growing category of news, even faster growing than politics. Entertainment, obviously sports is way down, other lifestyles way down. But it's almost like devoid the ability to talk about sports. Nobody really cares what celebrities are doing. There's this wave of interest in business and like business news. And I think that's a good thing that people are it's almost like this mainstreamification of talking about business, that more people are talking about these companies and what they're doing. And I think that's ultimately a good thing for building financial literacy. And what's really cool is to see the people who are kind of leading the way and changing how this stuff is communicated. So yes, I read the Wall Street Journal, but I also follow Carmen Perez on Instagram, who is someone who, clawed her way out of student loan debt and now is a personal finance creator, and shares like amazing bite-sized content that is actually actionable. Another example you guys probably know is Haley Sachs, and she goes by Mrs. Dow Jones. She has like hilarious videos, but they're rooted in true insight about how this stuff works, and you can walk away from it being entertained, but being a little smarter. I also love Morning Brew, especially their Business Casual podcast. They have amazing leaders coming on there all the time. I think they have Andrew Yang coming this week. And Kinsey, who's the host, is amazing. And she just sits down with these titans of business and kind of unravels how their brains work. And it's super interesting. So all of this stuff together, like you can actually really build your own literacy stack these days. So for example, mine, Bogglehead's Guide to Investing is like the original kind of guide that anyone will recommend to you if you want to just get the foundation. It's a little dry. Maybe I pair this with this book I just came across, Finessing Finances, which just translates what's in Boggleheads into a conversational tone that is super fun to read. I can read it in small chunks. I can go back and revisit, and it's entertaining. Daily newsletters are a great way to stay informed. Finimize has a really good one. Axio's market newsletter is also great, a little more like meaty, but really good content. And then I also use like my chat groups in public. So this is actually a view of my actual chat groups right now. The first one is like a future of fitness group, and we talk about basically self-explanatory. But the topic of the conversation right now is talking about Lululemon buying Mir and what that means for Peloton, where other players fit. I learned today from my coworker that Under Armour is selling MyFitnessPal, so I'm sure we'll be talking about that. The second one is the S1 Club. That was a group chat we had around the Lemonade IPO, and we actually had people in there who were analyzing the S1 filing and sharing the insights with the group. And then I have another group around freelancing females. That's a community we worked with before, and that's like a general sharing space. And so you can kind of stack like the traditional books with the newsletters and the social media and chats and build your own stack. And really what we're trying to do at Public is just that, we want to humanize this stuff. We want to put it into terms that people actually can relate to. You'll probably, if you read about stocks, you'll hear a lot of talking about sectors. No one kind of goes through the world and looks at the world in terms of sectors necessarily. The insight we had with that is that most people go through life and look at things through the lens of the things they're interested in, the things they're passionate about, and the causes they care about. And so within our app, we build these themes designed to help people discover investment opportunities that actually align with their interests. If you want to explore companies that are run by women, We curate a list there. If you're interested in the future of food delivery, Nom Nom Now has, all of the players in that space there. So this isn't telling you, what to invest in. It's just showing you what's available. So with that, that's the code one more time. I will share with you guys. If you haven't tried out the app, definitely try it out with $10 on us. With the fractional shares, you can apply that to any company you want. You could $10 in Amazon, $10 in Apple, and start small that way. The other cool thing I wanted to show you real quick was that everyone who signs up for public gets like a vanity URL like this. If you choose to be public, you don't have to, you can be private. But essentially this is like a cool way to kind of showcase how you're voting with your wallet. So it shows, like, this is my portfolio. It shows where I invest, shows your recent investments. You can share that out. If someone signs up through your page, you get a free slice of stock. So that's another cool fun thing you get by signing up. And then we also, this is a popular topic around the office, we got a new swag shipment in, and we have these really awesome invest hats, and I actually happen to have a lot of them right now. So if you download the app, I would love to hear what you think. So email me and send me your feedback, and I'll get you on the list for a cool hat. Here's my contact information. Hit me up. We'd love to keep the conversation going. Any questions you have. And with that, I think we can take some questions from the audience.
Thank you so much, Katie, for that presentation. I think it's so interesting, the different myths that people have, because that's some of the concerns that I have as well. So it was really, really assuring that I'm not on the boat by myself.
Yeah.
So we have, someone asked, could you give the link in the chat box? So yes, we will send the link in the chat box, and you'll also get it after from Katie as well, for that $10 voucher.
Yep.
So the first question that came in, and please let me know if you're okay to answer this. What if you are not a US citizen, but have a US bank account? Can I still invest?
I believe you can. I think it's just US resident, so that means US bank account. Give it a try, and if you have an issue, email me. I think you can, though.
Awesome. Okay, it was an anonymous attendee, so if you have a follow-up question to that, feel free to drop it in the Q&A. Another question that came in, does public deduct from your bank account without you knowing, i.e. if the stock falls and charges you?
No, so when you invest in a stock, it's obviously a positive value. Stocks never go negative. The worst they would do would be to go to zero, which that doesn't really happen very often. So I think the rule of thumb with investing is don't invest what you can't afford to lose. But there are, some stocks that are, they're known as blue chip stocks, and they're, giant companies that are fairly secure. And so you can do some research and understand like what are like the safer bets, understanding that, nothing's guaranteed. But it's never the case where, a stock goes down and, that's coming out of your actual bank account.
Got it. And then a follow-up question to that. Thank you, Martin, for sharing. I hope I said your name right. Martine, excuse me. Is about taxation. Where do you pay your taxes for the stocks if you are a U.S. resident and if you aren't?
Yeah, so with public, we're US only. I actually don't know a lot about international tax law, so I'll steer clear of that. But in general, with brokerage accounts, those are taxable. So you pay a tax on your what's called capital gains. So whatever you're making on the investment, you'll pay a tax on that. If there's two types of capital gains tax, one is long-term capital gains and the other is short-term. And the tax policy is really created to incentivize longer term, safer investing. And so if you hold a stock longer than a year, I believe that it's a range depending on kind of where you fit in the tax code. But for most people, it's like 15% you would pay on the gain. If you sell the stock and realize the upside before a year, that's a short-term capital gain, and that's taxed in line with whatever your tax rate is. So it'll be likely much higher than 15. And so that's designed to incentivize people to hold things for the long term.
Thanks, Katie. So one question someone had asked is, how big is the public community? About how many members are on the platform?
I can't share our numbers, but if you sign up, you can kind of see some of we actually have some people who are really well followed in our community. So people with 50, 60,000 followers. So it's not a tiny
Wow,
community. I just can't give I can't give the size away.
quite all right. So that's for the person that asked that question. Join and see, look around, and play around with the dashboard. And on that note, someone asked if you could go back to the slide of where you went through what exactly the dashboard looks like for the app.
Oh, sure. Let's see. I think probably this one. Oops. Yeah, so this is actually not the full view. You could think of it as, there's a social feed, which we see in this last slide. There's the feed view. This is more so the onboarding flow. In your actual portfolio, it looks just like any other kind of brokerage experience. It shows you what positions you have, so which investments you have, what the current value of those are, if they're up or down on the day, how much you've gone up or down over time, how much money's in your account. So you have that kind of the personal view of all of the numbers that are personal to you. And then there's the kind of social piece, that's what are people investing in, conversations, messaging. And so you're getting both sides in the same app.
Nice. Anyone else have any other questions for Katie? I feel like we covered so much in 40 minutes, so I'm
Yeah.
surprised we don't have more questions. Okay. Regina has asked, is there a minimum that you have to invest? No, no on the minimum.
Yeah, you could start with $1 if you want. I think that's the really important thing. I think for me, when I was learning personally, it's almost like learning a new language where you can read the articles and understand the terms and the language, and you want to know the grammar and the spelling, but you really don't become fluent until you go to the place where it's happening. And so historically, most people couldn't even have that experience because there were so many barriers. You needed a $10,000 minimum, or there was going to be a fee every time, or a management fee. And so what's great about like fractional shares and a model like this is that, if you have $20, we have a lot of college students in public, and they're great members of the community. They're so smart, and no one has a ton of money sitting around in college. They're not even, working yet. And so for $50 though, they could build a portfolio with multiple companies. You can say, I'm going to invest $3 in Elf Cosmetics, and I'm going to invest $10 in Amazon. And you could have that experience and learn. And then as you learn, you can add and grow over time. But that first experience, you don't have to put a lot of skin in the game.
Yeah, and I think that's important. Following up from your presentation is like, you don't need this huge stack of money to be invested and to start having those conversations about money and trying to do it the right way. So even if it's just a little something, that's why I love public. I think this
exactly.
So a question that came in through the chat: if you do not charge when you trade, how does public make money? Is there a yearly fee that folks have to pay?
Yeah, there's no yearly fee. So we're a venture-backed company right now. So we're focused on growing the community. Eventually we'll be focused on, monetizing the business. We actually believe though, the zero commission model, there's a lot of conversations about that. You hear conversations about Facebook, if you're not paying, you are the product, things like that. So we think it's really important to be transparent about how we make money. So on our website at the bottom, at the menu at the bottom, we actually have an article, how we make money, and it's all listed right there. So check that out. But yeah, there's no catch really. I get that a lot. It's like, what's the catch? You can read about how we make money, but there could be fees for, if you want to transfer things, or if you have like a special request, like very kind of edge case things. But day to day, you can get started, for free, and use that code for sure. Going to get the $10 free stock, and just give it a whirl on us.
Nice. Okay, so we also have a few other questions coming in on the Q&A. Is this only a phone app? I think the answer is yes. Like, do I have the opportunity to utilize it on my desktop? And then also, is it linked to like my phone number? I'm assuming yes with the app.
Yeah, only mobile right now. TBD, you know, we have a lot of product features we're working on, but right now it's just the mobile experience. And yeah, so the phone number, that's actually a good thing to point out. It is it's interesting. It's a brokerage account and a social app, right? And so some people who aren't familiar with brokerage accounts, the onboarding seems a little different than other things they've done. When you set up a brokerage account, there's certain rules and regulations that the government requires. So one of these things is called KYC. It's know your customer. And so there's questions we ask to understand kind of like who you are as an investor. So it'll ask you if you're new to it. It'll ask for your salary range. And when you set up the brokerage account, you do have to provide a social security number because we need to verify everyone's identity because we are a brokerage platform. And that's for, you know, regulation reasons. You know, the government and the regulators need to know who's investing in what, because that's how they kind of keep track and make sure everyone's playing by the rules. So it's definitely a secure app and a secure platform, and our website has all of that information if you're concerned about privacy and things like that. But that's a good thing to flag. Some people who haven't done this before are like, whoa, why are you asking for that? And it's all brokerages are required to collect that information.
Thank you, Katie. And then we have some few marketing related questions if you feel comfortable answering that. Sylvia asked, as a marketing professional, curious to know what has been the most effective way to build awareness and grow users on the app.
Ooh, most effective.
Maybe Sylvia's starting her own app or financial business.
Yeah, I mean, it's actually interesting. It's a mix. At a startup, you know, my background was primarily in brand marketing. And at a startup, as a marketer, you kind of do everything. And what's been a great kind of learning opportunity and growing opportunity for me is getting exposure to the growth side of things. And so it's always this balance of you want to be very efficient as a startup and make sure every dollar counts and that you're understanding the metrics. And then on the other side, there's this, like, as a brand, especially in financial services, it's really important that we do have awareness and credibility, because at the end of the day, this is an app that helps you manage your money. It's not just like buying, you know, something you see on Instagram or trying a new seltzer. And so both of those are really important, because without kind of the brand building, you could get people with the right ad at the right time, but if they don't trust or know you, they'll hesitate in our space. But you can't just be pushing towards efficiency, because, you know, you have to have a brand that stands for something. You have to be clearly communicating, and you have to have, you know, the credibility and the hype. So it's a lot of like push and pull at the same time. And we use all sorts of different, you know, marketing channels, from paid to SEO, PR, all of those kind of come together.
Thanks, Katie. And you also answered a second question in terms of like, what is the target audience for public.com? So thank you for kind of interweaving both of those questions. So we're getting a few notes in the chat of just folks that are joining our event internationally. And I just want to read again from what I understand from Katie, that at this time, they're only based in the US. Apologize for my Slack notifications. They're only based in the US. So maybe in the future, I mean, and I know Katie can't speak to this, but maybe in a few years, months, however, maybe public.com will venture into that space. But at this time, they're just for the US.
Yeah. Yeah, and depending where you are internationally, you know, I do know of platforms in the UK and abroad. So do some you know, research around that, because there could be newer entrants, maybe similar to public. I don't know. I think that the social piece is a little different, but there are definitely zero commissions brokerage apps abroad. So something for sure to look into, and hopefully we'll be in your country soon.
Fingers crossed. Any other questions? I don't have any else in the Q&A. Something else for right now. And Katie, if you wouldn't mind, can you just go back to the slide that has the link in there? And again, folks, we'll send this to you as well. So it's public.com/perks/GA. And I'll put it in the chat as well.
Yep, that'll just take you to our website, and then you just enter your phone number and we'll text you the app and go through that way, and you'll start with that free slice of stock.
Nice. And I think Katie already had in a previous slide her email address. So also don't forget to hit her up after you download the app for one of those free hats.
Yeah, just Katie at Public. I don't need to go back through that.
Yeah, you're good.
It's an easy one.
Katie at public.com. I'll put it in the chat as well. Well, since we don't have any other questions, Katie, is there anything else that folks should know about the app? Again, I can't say thank you enough for this presentation.
Yeah, no, thank you, Lauren. I love GA. I love coming to talk to you guys. Yeah, give it a whirl. Give me an email. Yeah, and like I said, check out all the awesome content General Assembly has. I'm always in there. And thanks everyone for the time. I hope everyone's staying safe and healthy, and thanks for joining.
Thank you so much, everyone. Enjoy the rest of your day or evening, depending on where you're tuning in.
Bye.
Bye, everyone.